morning and welcome to Buy Now, Sell Now on ET Now. I'm Alex Matthew and joining me to take you through the rest of this 1 hour program is Karunya Rao. A warm welcome from the both of us. Let's first take a look at how the markets are faring at this hour. In fact, it was a reasonably good start in the context of the handover that we got from the US markets and how some of those Asian markets have been faring. As of right now, you have the benchmarks that are trading, well, comfortably in the green, if you can call it that. The market breadth as it stands right now is in favor of the winners, but remember, in the second half yesterday that turned on its head. But as of now, the Nifty trading above 15,000 comfortably. One of the factors that is doing well for the benchmarks right now is the financials, and in fact the Nifty Bank is the top sectoral gainer as we speak right now. Some of the other sectors looking not so great in trade. There is weakness seen in the FMCG basket, in the IT basket, as well as the media basket. Also the pharma index losing about 0.3% or so. The broader markets at this point are underperforming the benchmarks to a certain extent, but are still in the green. One key factor to watch out for later today, and we'll get that data in the evening, is the FII sell figure or the buy figure. Remember, they sold about 1,500 crore worth of equity yesterday. If that pans out today as well, it could be a reversal of the trend. Yes, they sold in the first week of March, but not to the extent that could indicate a broad-based reversal of the trend that we've seen over the past couple of months. So that's going to be something to watch out for. Karunya, what I think is important is the fact that VIX has cooled off. So at least you may not see the kind of volatility that you saw in yesterday's trade.
Definitely some encouraging market signs there, Alex. But let's keep it with that, with the markets theme, and let's bring on board Aisha. She chatted with Mr. Raamdeo Agrawal earlier in the day to know more about his investment mantra and themes that he's excited about. She's here with us to wrap up essentially what he said this morning.
Well, there is this whole debate about growth versus value, and while growth, of course, has done well for the last 5 to 7 years, is it time now to switch your investment style to value or not? Who better than Raamdeo Agrawal? We had him on the channel just yesterday, and here's what he has to say. And he too believes that time has come to increase your exposure to value and ebb off from growth. And these are the sectors that he's betting big on. Listen in.
BFSI, particularly banking, insurance, asset management, NBFCs, housing finance, these are all very large segments of the market, and clearly they have been beneficial. In fact, they suffered. I mean, at least the banking lenders, they suffered big time, not only in terms of actual losses, but also in terms of stock prices. So last, in the first half of 2020, they were the worst of us. And now from there, they are provided, government has given a lot of relief, there is a massive liquidity, low cost of liquidity, and so all kinds of things have happened in the sector. And it looks they have provided well, and economy is on the mend. And just that high liquidity and very rapid recovery in the economy is the best news for the lenders, because all kinds of stress, whether it is borrowers, individual borrowers, or the corporate borrowers, as the business picks up, the ability of the companies to repay to the banks, that goes up, and hence the credit cost that comes down as the economy recovers. So as the economic recovery is expected in the next 12 months at about double-digit kind of thing, 11-12%, I think the stress on the corporate books will come down, and that's what the optimism is in most of the lenders. I mean, what I hear amongst the biggest of the lenders is that their credit cost, even in March quarter, will be much lower than what was expected by the analysts. So I think that's a good sign at the early stage of the recovery.
We've been talking about as to how the economy has been reviving, and the one sector that Raamdeo Agrawal from Motilal Oswal is betting big on, that's cement. He's talked about as to how the infrastructure revival is going to only aid and push cement prices forward, and that in turn is going to augur very well for the sector as well. Just listen into his views as to why he likes the cement sector for investment.
Yeah, I think in infra theme, Cement is a better bet because cement has a more application than just the infra. They have the housing demand also being held by that. And cement is a non-tradable commodities broadly, globally. So you have to make it for yourself in India. Even within India, north, south, east, west kind of thing is there because it's a very logistic intensive. So clearly, whereas steel and all they can be imported, and cement is clearly local play, and hence the local demand supply will play out well. And we have some wonderful cement companies in India. So I think that's where I would say that one of the plays for the infra or recovery would be cement.
Well, that's Raamdeo Agrawal telling us why he likes the cement sector, and that very key point that he made, that steel and other metals can be imported, but for cement, it's the homegrown market that is going to dictate how the demand supply actually manages and moves forward. And that's why he's betting big on the cement sector. He's talked about as to how you have pedigree companies within the space, and that's why cement is a preferred bet within the infrastructure space for him.
All right, let's quickly pull up the buy now, sell now stock cloud as well to give you an understanding of all the individual stocks to keep on your radar. I'd like to start with BPCL, definitely the biggest name that's in the limelight today on the back of the bulk deal action as well. Followed by a Biocon. They've received a subscription amount of 555 crore rupees from their wholly owned subsidiary of ADQ. The board of Biocon Biologics has consequently approved an allotment of 1.97 crore shares at an issue price of 280 rupees a piece. There's Dixon Technologies for their stock split, which is impending. The record date has been set for 19th of March 2021. Meanwhile, Emphasis once again back in focus. Blackstone is set to call off their stake sale on valuations. That is something that we're picking up from various reports. With Godrej Property, another name to watch out for. The company has approved raising of funds in one or several tranches. They want to raise about 3,750 crore rupees. They've also approved enhancements of investment limit up to 7,500 crores. Once again, you have Coal India in the limelight. They've approved an investment of about 47,300 crores on mining projects. There's also PSP Projects, a small cap name that's in the limelight on back of receiving a work order close to 1,500 crores for construction of medical colleges and hospitals at several locations in UP. Lemon Tree, another mid-cap name to watch out for. They've signed an agreement to set up an 80-room hotel in Nepal under the brand name Lemon Tree Premier. And finally, once again, on back of bulk deals, you have Max Financial, which is in the limelight. New York Life has bought close to 9.3 lakh shares there, sold by Max Ventures. Last name on our list today is PVR. UBS has released a note this morning. They maintained a buy with a target price of 1,800 rupees a piece, and they believe that the company is getting in a better position to deliver with visible indicators showing now.
We've got a regular guest on the show. Kunal Bothra is joining us. Kunal, good morning to you. How do you see the market spanning out today? What are the cues that you're picking up? And what are your high risk and low risk ideas for the day? Good morning.
So good morning, Alex. Good morning, everyone. I think it's a bit of a difficult market to frankly trade because after yesterday's round of extreme volatility on intraday charts on the Bank Nifty, today seems to be more of a subdued day for the banking index. So we, the gap up was almost 450 points on the Bank Nifty, and we've gained another 40-50 points further from those levels. So, the gaps are the ones which are generally indicating the major part of the move or eating the major part of the move for the banking index. And more or less post that, gap, we have traded in a very tight kind of a band for the index. But when you look at the components of stocks on the large cap front, there is a lack of follow through on price action for many of the large cap names. So whether it's the winners of yesterday, the likes of L&T, Glenmark, etc., which did pretty well for themselves, or whether it's the fresh amount of breakouts which you've seen. There is no also there is very important observation which I was looking at the charts for, and rather bid ask for many of the stocks on the FNO side as well. There is a dearth of liquidity in many FNO stocks as well. So I think in that aspect as well, I think it's probably an indication that the markets are in a consolidation in a range as such. And I think 15,000 plus or minus 100, 150 to 100 points. I think that's likely going to be the range for the Nifty. 35,500 is acting as a pivot for the Bank Nifty as well. So we've moved down 500 points yesterday. We moved up 500 points today, but we're still ambling at the 35,500 pivot. So I think till the time the liquidity doesn't come back again, the momentum doesn't come back again into individual stocks, it's going to be a bit of a difficult scenario to try and pick up momentum trades. Now in that aspect, I'm suggesting a couple of buy calls, and the theme is to go a bit contra. Now Apollo Hospital, the stock which has been correcting from 3,100 to current levels of 2,900, is a stock which is now coming back towards a major support level around the 50-day moving average. And as I said, that it's possible that many of these stocks which have been dragging themselves a bit lower, they could probably try and pick up pace over the next couple of days. So Apollo Hospital is a contra buy. From my side, would look at the target of 3,100, and stop loss could be kept at 28.40 approximately. And the second stock which I'm suggesting is a buy in a mid-cap name. Now mid-cap stocks have done pretty well for themselves. Dawat or LT Foods is the stock which I would suggest as a buy. It's showing a classical breakout of a bullish flag pattern on the weekly and the monthly time frame charts above that 60 zone. It's consolidated for quite some time at this range of 60 approximately. So I believe that the breakout would be a decent breakout for LT Foods. Would suggest a buy with a target of 80 as a positional target, and stop loss could be kept at 52.
Rajesh, hi, morning. Let's keep it with the high risk and low risk ideas. Any exciting fundamental calls you have for our viewers today?
Good morning, everybody. As we all know that the market is in a consolidation phase from some point of time. When valuations are higher, it looks for a trigger to consolidate or profit booking. We have seen corona cases going up or liquidity being drying up. So these are good times to buy good stocks, and I would suggest two stocks at this point of time. The first one is Grasim. With a target of 1,500 odd rupees, the BSF and caustic demand volume have gone up, demand has gone up, even the realization has gone up, fertilizer is doing well, and the best part is this company is holding Ultratech and ABCL, that's Aditya Birla Capital Limited. Ultratech is doing very well, they are going for an expansion. Today morning, there was a report from FII with a target of 8,000 odd rupees, and that's going to, if Ultratech moves up, that's going to show in Grasim numbers also. So, and they again hold holdings of 11.5% in Vodafone too. Numbers were quite good despite all those problems of soda underperforming, economy slowing down. Valuations are less than 25. So I think this stock can do wonders in a longer period, but for a medium-term target, we have 1,500. For a medium-term horizon, we have a target of 1,500. The second one would be Birla Park. This again is a mid-cap cement company with a capacity of 15.4 million tons post-acquisition of Reliance Cement. They have a strong presence in retail front. Further, they have been pushing more on premium cement. They have lined up capacity additions, which the management had said that they would be building a capacity of 25 million tons by 2025. And with the government focus of infrastructure, affordable housing, I think cement companies as a whole are going to do well. Third quarter numbers were very good. They were up by 82%. Capacity utilization has gone up. And the best part is they have got a jute division which is doing extremely well. We have a target of 1,000 odd rupees in the medium term.
All right, Rajesh, they're betting on cement companies. Grasim, incidentally, top gainer on the Nifty today and doing well for itself. Gentlemen, do stay with us. We're coming back to you for some more queries. In fact, on the other side of this short break, we'll be back very soon.
Welcome back back. You're still watching Buy Now, Sell Now right here on ET Now. And before we proceed further with the queries, let's just take a quick detour and get in Abhimanyu for a quick update. Delhi's High Court has sought Sensex reply on PIL against IT rules for intermediaries as well as news portals. Abhimanyu, tell us, what are you picking up?
Well, this is the first challenge which has been initiated against the centre's new rules for intermediaries and news portals, in which the Union Ministry for Information and Broadcasting has been asked to file a reply. The PIL, which was filed by a news portal itself, had claimed that Information Technology Act does not recognize news entities, claiming that IT rules for intermediaries intend to regulate news portals and media. Also, they had claimed that how can centre impose a regulatory burden on news and current affairs on something which is an ongoing process. The PIL has also asked that how can such a regulation be put, and has submitted that intermediaries are mutually exclusive and different from publishers. It remains to be seen what is going to be the reply which will be filed by the union government in this regard, in which the news portal has claimed that this is akin to shackling the working of news portals who report on news and current affairs. They have claimed that their petition does not include anything on OTT platforms, but rather they are only intending to contest the control which they are claiming Centre is going to put on news portals and media by putting in this regulation. They have claimed that no regulation can be put on intermediaries to regulate news portals and media.
All right, Abhimanyu, thanks for that update. That's certainly a story that we'll be tracking for some time. Let's now go to the queries that have been sent in by our viewers. And the first one has come in from Rajesh Jayakrishnan. And thank you, first of all, Rajesh, for writing in to us. You have a question on Federal Bank. You bought shares, 1,000 shares of Federal Bank at 80 rupees per share, and you're looking for an outlook. I'll come to you first, Kunal, on the charts. It's actually a stock that has gained significantly from the lows that it made last year, and seemingly it's not looking weak at the moment. It is trading below its 5-day average, but above all of its other simple moving day averages. How is it looking on the charts?
The stock in the near term could probably have going through a fatigue a fatigue in terms of uptrend. The chart patterns on the weekly and the monthly are also not exciting for Federal Bank. But then when you look at this in the construct of the last 9-10 months, the stock has done remarkably well. For a stock like Federal Bank to move from 40-42 levels to now at 80 plus levels, I think is also a very strong achievement for the stock as well. And interestingly, as I said, that even on the weekly and the monthly charts, it's not given a breakout as such, for Federal Bank. So which means typically is that the stock lacks a stronger degree of momentum on the long-term charts. In these kind of environments, in these kind of stocks, I think what is very important is the time horizon. So if you have a very shorter term time horizon, but because of the lack of momentum into these names, it's possible that the stock may go through a consolidation every now and then. But if you are in for a longer haul, and I'm assuming that with a time frame of at least 1 to 2 years, at the minimum for a stock like Federal Bank, then there are stronger chances for you to gain a significant amount of upside on a stock like Federal Bank. So it's a stock which lacks short-term momentum, but it's a stock which is trying to develop a longer-term breakout in terms of chart patterns. I think if you have a time horizon of at least 1.5 to 2 years, then I believe an upside closer to 105, 120 range should be a possible breakout for Federal Bank, even from current levels.
Rajesh, could you also give us a quick peek into the fundamentals of Federal Bank?
Yes, the fundamentals are very strong. They have got 1,284 branches. Bank has been doing well this year. They have grown by around 6%, and the management has guided that by FY22 they will be having double-digit growth. Strong balance sheet, strong management. I would say they just fallen into bad times, but going forward, 3 figures would be a very surprising figure for this bank. We believe that 120, 125 levels can be achieved in the next 1 year or so. The gold loan division, auto, home loans, everything is doing well. I would say hold on to the stock, and if it for any reasons goes down, one can even add to that.
Okay, all right. Moving on to query number 2, which is also an email. Prasad Nukala has written to us. They've bought LIC Housing Finance shares at 464 rupees levels and wants to know what are the prospects of the stock. Coming on this, Kunal, first, if you could talk to us about the technicals. Right now, the stock is perched at 435.
So, the long-term charts, LIC Housing, I think, is at a resistance point. So, I think 450, 470, which the stock tested previous month, if I'm not wrong, in the month of February. I think that's more of a resistance zone. Structurally as well, the stock is trying to come out of a resistance. But because of this, strong hurdle point, I think the stock may take some bit of more time. So, maybe it's a cool off, which is required from the overall market perspective, or maybe it's a cool off which is required from the, financial services names. So I think that's one of the reasons why I believe LIC Housing could remain a bit sideways in the near term. But if your time horizon again, is more on the longer term perspective, so with a horizon of at least 1.5 years to 2 years plus, then I believe that there is a very strong case which could be built that LIC Housing Finance, like many of these other, HFC names as well, could provide that breakout, much needed breakout on the upside. And I think if that happens for LIC Housing, a target potential of almost 550, 600 should be a possible target range for the stock. So I would suggest a hold, and assuming if the stock comes back to say 400 or 380 kind of levels, look to average further at those zones.
All right, I'm coming to you, Rajesh, on this one, and a couple of concerns that I have on this investment that Prasad has made. He's gotten at very close to the 52-week highs, and you're seeing that the competition is really heating up in the HFC space. You have SBI that holds about a third of this market. HDFC is another heavyweight in the market, and there's a huge amount of pricing pressure that is coming in. Do you think that LIC Housing Finance will be able to hold out in the midst of that kind of pressure? And what do you have to say with regard to the entry price?
Concerned that there are concerns of competition starting up in the housing finance market as such, but we should not forget that this company has a strong parentage of LIC, and that's the reason the cost of funds is very low in case of LIC Housing Finance, and that keeps NIMs on a higher side. There is a cushion on NIMs. Valuation-wise, it's trading at a price to book of around 1, PE of less than 7, dividend yield is also good. And with government push on affordable housing and all, and the best part is LIC Housing's loan portfolio is more inclined towards individual home loans. So I think this is a strong ground, and we have a buy call on this with a medium-term target of 525 rupees.
All right, there's still a buy call despite everything that's happening in the HFC space, so that indicates that it is actually quite a strong name. We've got another question coming in from Lakshman, and this is a short-term query. Kunal, coming across to you on this one. SAIL is the first one, and Nalco. He hasn't bought yet. He's asking whether he can for the next 6 months.
Absolutely. I think both these stocks, SAIL and Nalco, look exceedingly strong on charts. Now, there is also the advantage of, these stocks being on the PSU side as well, which also adds flavor because, of late, we've seen that how the market has suddenly gotten a fresh liking towards many of the PSU stocks. So I think that's also to an advantage. And structurally, I believe that, these metal stocks, and I think if you're starting to allocate money towards metal names, I would first, suggest that give first preference towards names like Tata Steel and JSW Steel. And then if you have, residual amount left, then you can look at buying stocks on SAIL as well as on Nalco. Yes, these stocks may be appearing to be low price name, but it's far more better and prudent to go with the leader in the pack. So I think leader in terms of price performance, of course, has been names like Tata Steel and JSW Steel. So I'm extremely bullish on the metal names for a longer term view. And I believe over the next couple of years, there is a strong possibility that many of these metal stocks can give you stellar and strong returns even from current levels. But I think my suggestion would be that invest on the large cap names, Tata Steel and JSW Steel first, and then if you have I would say free capital left further, then I believe look at opportunities on SAIL as well as on Nalco.
All right, so those are the views coming in from Kunal for a short-term trading standpoint alone. Moving on to query number 4, another email query. Vishwa Mishra wrote to us. They want our experts' view on Jindal Polyfilms, whether he should sell. Seems like he is already invested in this one, or should he remain invested? Kunal, the last 2 weeks have been phenomenal for this company and the stock price, from 470 levels to now at 718. Do you think there's further steam for an up move?
Absolutely, Karunya, and I believe that this is also one of the stocks which I do track in the mid cap space. Look at the charts over the last 10 years. So if you can look at the charts over the last 10 years, it's formed a classical, ascending triangular pattern where the stock, for last 10, 12 years from 2007 or 2008, if I'm not wrong, had a huge resistance at this 450, 470 zone, and the supports kept on rising on the yearly charts. Now the stock has, for the first time in this 12-year 13-year period, has given that breakout of this ascending triangular pattern. So this is a huge breakout possible for a stock like Jindal Poly. The nature of the stock is also a very, very high beta, and which is why I think there is a strong possibility that the stock can go into a multi-quarter, multi-year upside even from current levels. So if you've assumingly bought at lower levels, and I'm assuming that you are sitting on decent profits on the stock, then I believe you should hold on to your investments over here, because if the long-term structure plays out true to the potential of the stock, then there's a strong possibility that Jindal Poly could be a stock which can easily come back to those 4-digit kind of levels as well, and beyond that as well. So I would suggest a hold on Jindal Poly from current levels.
Right, let's also get a fundamental view on this. Rajesh, I do not know what his buy price is, but Vishwa is holding on to the stock. He's asking whether or not to hold on for the long term, I'm guessing. What's the view on Jindal Poly?
The stock, the company has approved the expansion plan of 700 odd crores, and third quarter numbers were also good. It was up by 120%. The bottom line was up by 120%, despite the fact that revenue was up by only 12%. Lower crude prices have helped. Going forward, also we think there can be a good upside on this stock because of a low valuation. It's trading at a PE of less than 5. I would suggest a hold on to the stock.
All right, we've got another query coming in from Gulshan Kumar. He's bought 1,300 shares of Vardhman Textiles at 1,100. He's asking if he should hold, sell, or add. Kunal, coming to you on this, on the charts, how do they look?
So I think it's a strong kind of a charts on the longer term basis, but I'm not sure of the liquidity and how liquid the stock is on a sustainable basis, because every now and then when the stock goes into a bit of a sideways, the liquidity tends to drop. So I think that's largely going to be a concern with a stock like Vardhman Textiles. But as I said, that the structure of the stock, on the medium term charts looks fairly attractive. It's more than double, I think, if I'm not wrong, in a matter of 7-8 months from the September-October lows as well. So I think the chart prospects are. The question is, liquidity and whether the stock is liquid enough or not, because I don't track the stock that often. But the construct of it looks quite attractive. So if you've already bought the stock, then I believe you can hold on to Vardhman Textile.
Rajesh, your view on Vardhman Textiles, is this a company that you would like to recommend a hold on?
See, we are very bullish on Vardhman Textile. It's one of the best stocks in textile sector as a whole. And 3 years down the line, we expect the stock to achieve a target of 1,800, 1,900 odd rupees. After lockdown, we have seen yarn volume growing, fabric volume growing, lower channel inventory have added to fabric demand. Company has announced a 1 lakh spindle capacity expansion with around 700 crore. The balance sheet is very strong. Management is very good. There is no issues of corporate governance, and they have a long-standing relationship with their clients. It's one of the best stock in Vardhman Textile. The only problem is liquidity because of a small capital base. We would suggest any dip in the stock as a buying opportunity for a long-term investor.
All right, there's the verdict on Vardhman Textiles. Then, on that note, gentlemen, thank you so much for joining us and helping our viewers out with their queries as always. We're slipping into a short break. On the other side, there'll be lots of more individual stock-related news and updates, and also we're awaiting AMFI data, so stay tuned for that.